Hello and welcome back to Travel Along with Us. Today, I want to tell you a short story, a story that might just be yours. We'll see how RBI rate cut impact works. Meet Ravi. He's a middle-class working professional from Bengaluru. Just like many of us, 2 years ago, Ravi took a home loan of 50 lakhs to buy his dream apartment. The interest rate on his loan, 9%. Every month, Ravi paid an EMI of rupee 44,986. It was manageable, but definitely tight on his budget. Just a few days ago, the Reserve Bank of India, under the leadership of Governor Sanjay Malhotra, announced a 25 basis point cut in the repo rate, bringing it down to 6%. This decision was part of the first monetary policy for the financial year 2025-26. Now you may ask, how does this affect Ravi? Well, his home loan is linked to the repo rate, like most floating rate loans issued after October 1st. 2019. That means when the repo rate goes down, his bank may lower his interest rate too. And let's say his bank passed on not just the 25 BPS cut, but went a bit further and reduced the rate by 50 BPS, from 9% to 8.5%. Suddenly, Ravi's EMI drops from rupee 44,986 to rupee 43,391. That's a monthly saving of rupee 1,595. In a year, Ravi saves rupee 19,140. Over the entire 20-year loan term, he saves more than 8 lakhs. Imagine what you could do with that money. Invest, travel, or just reduce your financial stress. But remember, not all banks pass on the benefit instantly. So stay informed, talk to your bank, and if your rate is still high, think about refinancing. Because even a small cut of 25 basis points can make a big difference over time. Check your credit score. 750 or above gets you the best rates. Compare lenders. Every 0.1% difference in interest saves lakhs. Fixed versus floating interest. Choose based on market trends and your comfort. Understand EMI affordability. Never stretch beyond 40% of your monthly income. Read the fine print. Foreclosure charges, hidden fees, processing time, know-it-all. ChatGPT, you said, provide last 10-year statistics about home loan in India. Give his story. ChatGPT said, sure, here's a short story-style take on the last 10 years of home loan trends in India. A decade of dreams. The home loan story in India, 2015-2025. Once upon a time in 2015, India's middle class was growing ambitious. Cities were expanding, and the idea of owning a home became more than a dream. It became a plan. Interest rates hovered around 9.5–10%, and banks were cautious but optimistic. Housing demand was steady, especially in metros like Bangalore, Mumbai, and Delhi. Then came 2017, a year of reform. The introduction of RERA, Real Estate Regulatory Authority, brought transparency. Though the real estate market slowed temporarily due to compliance adjustments, trust in the sector grew. Home loan rates started dipping, falling to around 8.5%. In 2018 and 2019, the demand bounced back. Millennials stepped into the buyer's shoes. Salaried professionals, especially in IT hubs, started applying for loans like never before. Banks began offering competitive rates, and fintech players started making the loan process smoother. 2023 and 2024 marked a shift toward digitization. Now in 2025, the story continues. Home loans are still the preferred route to home ownership. Digital lenders are competing with traditional banks. Government subsidies are now more targeted. Interest rates hover around 8.25%, stable but slightly rising. Still, the Indian dream of owning a home, as alive as ever. Thanks for watching our YouTube channel. Thank you very much.